Building a robust investment portfolio usually involves the classic trio: stocks, bonds, and cash. These traditional assets can enhance wealth and offer some security, but considering additional diversification can further strengthen your portfolio. Alternative investments, which include assets outside conventional stocks and bonds, provide diversification by not always moving in tandem with the stock market, potentially safeguarding your investments during market volatility. Alternative investments encompass options such as private equity, venture capital, hedge funds, commodities, real estate, art, and collectibles. These assets serve as additional tools to bolster portfolio resilience, especially in turbulent times. Whether you are starting your investment journey or looking to expand your strategies, alternatives deserve careful consideration. Welcome to Smart Money Library, a social platform delivering practical financial insights covering investments, retirement planning, elegance, luxury, and successful living. Support our community by liking, sharing, and subscribing for more beneficial content. Currency investments, for instance, display a negative correlation, -48% with traditional assets, often moving in the opposite direction. Commodities like oil or agriculture have a low positive correlation, 38%, implying they don't closely follow stock market fluctuations. Gold, a classic safe haven asset, demonstrates a minimal positive correlation, 16%, providing a buffer during market downturns. However, some alternative investments come with limited liquidity, meaning they can't be quickly converted into cash. Assets like real estate, artwork, or private debt usually take longer to liquidate. Here are 8 intriguing alternative investment options worth considering. It is crucial to thoroughly understand their workings, integration into your existing portfolio, tax implications, and liquidity constraints before investing. Real estate. Real estate offers consistent cash flow and potential appreciation, typically independent of stock market performance. Investment avenues include real estate investment trusts, REITs, companies owning income-producing properties. Public REITs trade like stocks, while private REITs require advisory channels. Residential commercial rental properties, direct property ownership yielding rental income, appreciation, and tax benefits, but with limited liquidity. Land, investments in forestry, agriculture, or potential development areas, usually long-term, but possibly rewarding. Fine art and collectibles, assets like paintings, sculptures, or rare memorabilia hold value based on market demand. Traditionally exclusive to the wealthy, platforms like Masterworks now enable everyday investors to buy fractional shares, providing enhanced accessibility and liquidity. Gold and precious metals. Gold, silver, and platinum are enduring stores of value with low correlations to conventional investments. Available as coins or bullion bars, purchasing through reputable dealers ensures safe storage. Alternatively, ETFs like SPDR Gold Shares, GLD, and iShares Silver Trust, SLV, offer indirect exposure. Commodities. Commodities include agricultural products, energy resources, and precious metals. Traded primarily as futures contracts, commodities can also be accessed through ETFs or mutual funds, simplifying investment and risk management. Lending. Investing in debt instruments involves lending money and receiving regular interest, plus principal repayment. Options include peer-to-peer, P2P lending, where funds are lent directly to individuals, and mortgage debt investments involving discounted or new mortgage financing. Cryptocurrencies. Digital assets like Bitcoin utilize blockchain technology and offer significant potential returns alongside substantial volatility and risk. Given this uncertainty, thorough research and comfort with potential market swings are essential. Crowdfunding. Crowdfunding allows broad participation in funding entrepreneurial ventures or creative projects. Investors can spread investments across multiple opportunities, including real estate, private stocks, and promissory notes, without substantial initial capital. Private equity. Private equity involves investing in non-publicly traded companies, including startups, growing private firms, commercial real estate ventures, or hedge funds. These investments typically have less liquidity but offer significant potential returns, especially if the companies eventually become publicly traded. If you found this content valuable, please like, share, and subscribe to our channel for more insightful videos. See you next time.